Good. Okay, so once again, my name is Jeri Bittorf, and I work for Resolve Counseling Services Canada. And I'm really happy to be here today to do a presentation around credit. Um, so we're going to get right into it because we do have a really big agenda here to get through. So basically, what we're going to talk about today is credit reporting, how to boost our credit score, our credit ratings, how to get those up and what they are, um, collection agencies, what they're allowed to do and what they're not allowed to do, how can we tackle our debt, um, what do we do if we're a victim of fraud, and how to handle small claims courts and garnishments. So lots and lots of information. I'll give a little bit of background around Resolve. We are a not-for-profit counseling agency. We're multi-service. We have many different programs, but I work in the financial wellness program, and we offer people lots of advice around budgeting, credit, um, when maybe somebody is struggling with their debt and they don't know what to do, we offer free advice around what your options are when it comes to managing your debt, building up your credit. We also offer some coaching programs. I'm going to get into a little bit more of that near the end of the presentation. But we are located in Kingston. However, I do all of our appointments virtually, so I help people nationwide. So anybody who wants to reach out and set an appointment, there will be the contact information at the end of the presentation. Okay, so for credit reports, I'm not sure how many of you have actually pulled your credit report. But in Canada, there are two main credit reporting agencies. So the first one is TransUnion, and the next one is Equifax. There are others. There's Credit Karma and there's Borrowell. And those are great free options to access your credit report. And I know that I think I'm signed up with Credit Karma and I can get credit alerts and, find out if there's any activity on my credit report. So Credit Karma and Borrowell are really great resources. However, they are not the main sources. So we're going to get into a lot of information around what's on your credit report and how to fix errors on your credit report. And if that happens, if you pull it and you find out that there's things on there that are not accurate, or maybe you are a victim of fraud, it is really important that you go to the source, which is TransUnion and Equifax, because they're the ones that are going to be able to update your credit report. TransUnion and I'm sorry, Borrowell and Credit Karma buy their information from TransUnion and Equifax. So anything that needs to be fixed would need to go through TransUnion and Equifax. Just so you're aware, you can go on their websites and request a free credit report once a year. And I really recommend that people do that. One, so that you're up to date with what your credit score is. What type of credit has been out on your name. You know that if you're going to apply for credit or apply for an apartment, you know what everybody's looking at. But the main reason right now that I really want people to be pulling their credit report once a year is because there's a lot of fraud happening out there right now. Um, I know that myself and my husband have both been victims of fraud in the last, I'd say, 18 months, and all of it is fixable, but it does take time. And unless you know about it, you don't want to be applying for financing for something and then find out, at the last minute that you've been a victim of fraud. So if you go on Equifax Canada's website and you scroll through, you're going to find the free section to pull your credit report. They have lots of places in there where it's going to look like you need to pay for your credit report. And if you get to a place where it's asking you for a credit card information, you're in the wrong spot. So go back and you'll be able to find the free version. And all you need to put in is some identifying information and your email address, and you'll get your free credit report sent to you in a few minutes. For TransUnion, I personally cannot find on their website where to get the free credit report. They are, however, required to give it to you. So for myself, I had to call them and they sent me a link, and that was how I was able to access it. So I really encourage everybody to pull their credit reports often, or not often, at least once a year. The things that are on there are, how often you've applied for credit, any addresses that you might have had, your credit score information, the credit that you have in your name, what's the highest amount that you've owed, what your payment history is, and all of that stuff is going to be on that credit report. And I'm going to go into more detail a little bit later on why that's important and how long things stay on the credit report for. Okay, so we're going to get into credit scores because I get a lot of questions around credit scores. So your credit score is a number between 300 and 900, 300 being the lowest credit score and 900 being the highest credit score. And you have multiple credit scores. A lot of people don't realize that. So your credit score with TransUnion might be slightly different than your credit score with Equifax, than what it is at Borrowwell, and what it is at the bank, and what it is at Credit Karma. So you're going to have various types of credit scores. And the reason is because your credit score moves up and down based on your payment history and your credit utilization and your credit history. Not every lender reports to both credit bureaus. Some lenders only report to Equifax. Some only report to TransUnion. Some report to Equifax 1 month, TransUnion the next month. And so depending on how up to date those records are with all of your information and when places like the bank and Borrowwell and Credit Karma received it, that's going to depend on what your credit score is. So it's never going to be the exact same number across the board. However, it shouldn't fluctuate by huge numbers. It should be relatively within the same range. So the things that impact your credit score the most, the two biggest pieces that impact your credit score are your payment history and your credit usage. So payment history makes up 35% of your credit score. So obviously you want to make at least your minimum payment every single month. And if you do that, that's going to show and reflect positively on your credit score. But the next highest piece of that is your credit usage. So your utilization, which makes up 30% of your credit score. So let's say, for example, you have a credit card with a limit of $1,000. A good rule is that you want to try to never carry a balance of more than 30% of your available limit. So if your limit's 1,000, you don't want to carry a balance of more than $300. It is fine to max out your credit card and pay it off and bring it down within your payment cycle, but you don't want to carry a balance month over month of more than 30% of your available limit. If you do, you're going to notice that your credit score is going to start to go down. And I get calls from clients who say, why is my credit score poor? I've never missed a payment. I always make my payments on time. And more times than enough, it's because they're too close to their limit. So it's really important that if your goal is to improve your credit score, that you work really hard at bringing your limit down to at least 30% utilization. 15% of your credit score is the types of accounts that you have. So you do want to have multiple accounts. Sorry, Stephanie, which screen am I sharing here? Am I sharing? What screen am I sharing?
You've got the credit score
Is it
divided
the
up by
is it the
percentage.
white one or the one with my notes? Because I feel like it's the one
No,
with my
it's the
notes.
one with the pie chart.
No, I know it's the one with the pie chart, but is it the
Oh,
one that shows both screens or just one screen?
it's just one screen.
Okay, perfect. Thank you. Just
Yeah.
because the red is around the other one. Okay,
Yeah.
apologies. So 15% is the type of accounts that you have. So that would be things like lines of credits, OSAP, car payments, credit cards, things like that. I've spoken to people like mortgage brokers, for example, who say that if somebody has maybe a derogatory mark on their credit report, maybe you filed a bankruptcy, did a consumer proposal, had things in collections, things like that. If that was the case, then what would happen is that in order for a lender to want to lend you at a lower interest rate, they're going to want to see that you've established at least two forms of credit in your name with limits of at least $2,500 each. So that's a really good goal to make it if you're somebody who's trying hard to bring your credit score up after maybe you've had a blip in it, or maybe you're new to credit and you're trying to figure out how to bring that credit score up, is that they want to see a mixture of credit. lenders want to see that you're able to handle multiple forms of credit. So two is a good number. If you can do more than that and manage it properly, that's going to help bring up your credit score even more. 10% is the number of new accounts. So every time you apply for credit, you actually lower your credit score. So not by much, it's not a huge amount, but if you're applying too much and too often for credit, it now can look like you're credit seeking. And in the eyes of the lender, it could look like you're doing that because you're in financial difficulty, which then will make it actually even harder to get credit. So you do want to minimize how often you're applying for credit, but shopping around is okay. If you're looking to get vehicle financing and you're shopping around for that, that's okay. That's understandable. If you're shopping around for, mortgage rates and things through a mortgage broker and there's a hit on your credit report, that's understandable. So don't be afraid of all hits on your credit report. But you don't want to be going out and applying for multiple forms of credit too often because that can actually lower the score. And then another 10% is the age of your credit accounts. So it is a good idea to keep your uh, old credit open, even if you're not using it anymore. One, it shows that you have low utilization, which, like I said, accounts for 30% of your credit score. But two, it also shows that you've been able to manage credit for a long period of time. And that's going to help improve your credit score as well. Now, with all of that said, if you're somebody who, might be struggling, let's say you've been in debt and you've paid down your debt and you're really worried about keeping multiple forms of credit open because you're worried you're going to go back into debt because maybe you might have some impulse shopping, there might be some, difficulty managing your budget. There's various different reasons for that. If that's the case, go ahead and close some of those accounts. Yes, you might take a little hit on your credit score, but it's going to bounce back up. It's better than, all of a sudden ending up back in debt again if that's a big concern for you. So this is really going to be situational and dependent on the client and what their goals are and kind of how they manage their money. So an ideal credit score is, anything between 800 and 900 is the best credit score you can have. That is an excellent rate. You're very low risk and you're easily to be approved. Kind of that mid-range of the 670 to 740 is, you're good, you're average, and you're usually going to be approved. Um, when you have kind of that 580 to 670 range, you're going to be looking at higher interest rates when you apply for things like financing for a vehicle, a mortgage, things like that. You're not going to qualify for those lower interest rates. So you do want to get your credit score above that 670 range, ideally up into the 700s. And, high goal would be up into the 800s for sure. And, if you're between 300 and 579, it's going to be really hard for you to be approved for credit. And so in that situation, if you pull your credit report and you find yourself in that range, I really do encourage you to reach out, set up an appointment. We can go through what your credit report looks like, talk about, how you can fix some of the errors or fix some of the balances or whatever might be on there so that you can start building up that credit score. So other ways to improve your credit score would be to, check your credit report, like I mentioned, just to make sure everything is good on there. Set up automatic payments. If you're somebody who is forgetting to, pay your cell phone bill on time, pay your hydro bill on time, typically things like hydro is not reported to a bureau unless you miss payments. So if you're missing payments, they're going to potentially report to your credit bureau. Same with your internet. Cell phone providers do tend to report to bureaus often. So it is important that you're making those payments on time. And if you're not, then set up those automatic payments is going to just make it a little bit easier for you to not miss a payment. Keep your usage under 30%, like we said. Most of these I already spoke about. The ideal thing, though, is to pay that balance off in full every month or at least keep that utilization low. And if you're struggling, if you have maybe had things in collections, paid off your debt, had a bankruptcy, consumer proposal, anything like that, and your goal is to rebuild your credit, then a really great place to start would be a secured credit card because you know you're going to be approved. So if you pull your credit rating and you see that you're in that low 300 to 580 zone, a secured credit card is a wonderful way to kind of get back into the credit game again. I usually recommend Capital One, and that's for a few reasons. One, they guarantee the approval for the secured card. Typically, what you would do is you would put a security deposit of about $300 on the card, and they're going to give you a limit of around of $300. But it is not a prepaid card. It is a real credit card. So if you purchase something for $10, you are expected to pay that back. So what you would do is you would get that credit card, and then I always recommend that if building credit's your goal, then pick one or two of your fixed expenses. So let's say your cell phone bill, your internet, insurance, something like that, and have that payment come directly off the credit card instead of your bank account. That way, you know that every single month you are having a charge on your credit, but you know that you're able to pay the balance in full because those are bills that you're used to paying. And I would only use it for that. And if you have Capital One, the reason I like them is because if you're using the card and paying it off every month, they will actually start to increase your limit. So I'll meet people who are, maybe in the middle of a bankruptcy, but they're starting to build their credit and they've already been able to get their limit up to 2,500, 3,000, 4,000, things like that. And like I said, lenders want to see that you can manage credit with a limit of at least $2,500. So if you do that, you get that secured credit card, you have one or two fixed expenses coming off every month, you pay the balance in full, you're going to see that your limit is going to start to increase. And you keep that utilization low, you're going to see your credit score start to go up. If building credit is new to you, or you feel like you have a hard time managing credit, then I would not use your credit cards for things like groceries, gas, entertainment, at first at least, because those are the areas that all of us tend to overspend in. And if your goal is to build your credit score, it's really important you can pay the balance off in full. So you don't want to accidentally overspend and then be struggling to pay off your balance. Once you get there, if you're able to pay that balance off in full, then by all means use a credit card for multiple things. And maybe you can collect points and things like that, not through the card, but through other avenues, maybe. So that's kind of a really great way to start building credit if maybe you've had poor credit to begin with, is that secured credit card. And also just wanted to make note, good credit stays on your credit report for up to 20 years. So if you have had some more derogatory ratings on your credit report, but in the past you've paid stuff off in full and those accounts have been closed, then Equifax does keep it on for about 20 years. TransUnion is usually around 6 years after the last activity. So they don't keep it on as long. But the idea is that good credit will well outlive any bad credit. Okay, so when you're looking at your credit report, you're going to see that there's some ratings. So I'm not talking about credit scores anymore. I'm now talking about a rating. And usually that rating is between 1 and 9. And there's a letter before that rating. So it could be an R, which means revolving, and that would be things like credit cards. It could be an I, which means installments, and that could be something like a car loan. Or it could be an O, which is an open credit, which would mean something like a line of credit. So you're going to see that rating, that R, that I, that O, next to your credit report or next to your credit line. And then you're going to have, excuse me, you're going to have a number between 1 and 9. So we'll use R because that's the most common type of credit would be credit cards. So if you've never missed a payment and you make your payments on time every month, even if it's only the minimum payment, you're going to have an R1 status, which is the best status that you can have in that regard. So it'd be R, and 1 means that you pay your rate, your payment every single month on time. If you become a month late, you're going to be an R2. If you become 2 months late, you're an R3. 3 months late, R4. And then as you go down, let's say you need to do something like a consolidation loan through the bank or a debt management program, which I'll get into in a little bit. That would put you in an R7, which means that you're using a third party or a third or another option to help you pay off your debt. So people don't always realize that when you go to the bank to get a consolidation loan, that actually can lower your credit down to an R7. However, that could make it so that you're able to get out of debt faster, which means that you're able to build up your credit faster. So for some people, that is a really great way to get out of debt, even if it's going to mean a slight hit on their credit report for a small time being. Um, if you have a vehicle that's repossessed or a house that's repossessed, that's going to be an R8. And if you have things in collections or you filed a bankruptcy or consumer proposal, that's going to show up as an R9. Now, how long these things stay on your credit report for? Like I said, if it's good, if it's R1 and it's Equifax, you've never missed a payment, it's going to stay on for 20 years, more give or take. If, however, you have negative credit, so you've had things in collections, it's going to stay on for 6 years after the date of the last activity, which is typically the date that you paid it off in full for most people. So it will stay on your credit report for that long. Um, Other things that I just want to mention is some people will say to me, well, if I don't pay it and I ignore it, it's going to go away. I'm not going to owe it anymore. And that's not necessarily true. So there are statutes of limitations on how long a creditor can sue you for your money, for the money owed. And in Ontario, most provinces, that's 2 years. So they only have a 2 year window to actually be able to sue you for money. That doesn't mean they can't continue to collect on it, though. And if you acknowledge the debt, that can start this window kind of over again. So there is a statute of how long they can actually sue you for, but it doesn't mean that if you just ignore it, it's going to go away. Chances are it probably won't, but there are some really good options to help you pay off debt if you find yourself struggling. Places like Quebec, they can sue for up to 3 years, and Newfoundland can sue for up to 6 years from when the account was first in arrears. So collection agencies, what are they allowed to do and what are they not allowed to do? So I have two columns here, the do's and the don'ts. So in Ontario, just because that's where I'm from, so I have most of my information from here. But if one of you's from somewhere else other than Ontario, by all means reach out and I can find the information for your province. So in Ontario, they can call you up to 3 times a week, um, but they're not allowed to harass you or threaten you. They are allowed to contact your employer. And sorry, back to the 3 times a week. If they left a voicemail, there's no limit of how much they can call you if they didn't speak to you and they didn't leave a voicemail. So if they just call and hang up when you don't answer, they can call you multiple times a day. They can call you multiple times a week. But they're only allowed to leave a message 3 times a week or contact you and actually speak with you 3 times a week, just so that you're aware of that. They are allowed to contact your employer, but that's only to confirm employment. They're not allowed to talk about your debt. However, I mean, they probably are going to say where they're calling from because most likely your employer is not going to confirm anything if someone's not going to give them any information. So they might end up saying that they're a collection agency, but they're not allowed to discuss the debt with you or with them. They are allowed to contact your friends and family, but once again, they're not allowed to discuss your debt. They can take legal action, but we talked about the statute of limitations on when they're allowed to do that. And they're allowed to report to your credit bureau. So, what they're not allowed to do, they're not allowed to harass or threaten you. And sometimes when a collector calls, it can feel really intimidating. And I usually will tell clients, like, if you're afraid to speak to somebody at a collection agency, I completely understand that because it can be really, really, like I said, intimidating. Um, but it is a call center. So if you speak with somebody and you don't like how they're talking to you or how they're treating you or what they're saying to you, you can hang up and call back, and you're most likely going to get somebody else. And hopefully that person is a bit more gentle, has a bit more compassion, and hopefully they're gonna, be able to help you. But they're not allowed to be threatening and they're not allowed to be harassing. They can't call you before 7 a.m. and they can't call you after 9 p.m. and they're not allowed to call you on holidays. If you dispute the debt in writing, if you tell them, I was a victim of fraud, for example, and you put it in writing to them, they are not allowed to contact you unless they can prove otherwise. And they can't continue to charge you interest. I have little asterisks with that because it also depends on the province that you're in and the original agreement that you signed. So some original agreements might have that they can continue to charge you interest. But for the most part, especially in Ontario, Ontario is very strict with that, is that they need to limit or ban further interest. So there might be a limit to it if it's within an agreement. But for a lot of cases, interest is banned. So the good thing is that a debt, once it gets to collections, should not grow at the same rate that it grew before it went to collections based on interest. So that is something you're going to want to look at the fine print of your original contract and see, if that's something that they're allowed to do. They're also not allowed to refuse partial payments. Now, I have that in an asterisk because they're going to tell you that they can't accept partial payments, um, but they can't refuse it if you send it. So they might say to you, "Oh, we're not going to accept, $50 a month because that's unacceptable." But if you send them $50, they're going to cash it and they're going to put it on your debt. Because if they don't and then they decide to sue you after, that is not going to look good for them in court. And I've been with clients to court and I've seen, the justice say, like, why did you not accept these payments from these clients? Or doing the best they can. I want you to accept these payments. So it is not going to look good for them if they refuse a payment from you. They might tell you that they can refuse it, but just send it anyways if that is your goal, is to pay it off, because they will put it towards your debt. File a complaint. So let's say you have a collector who is harassing you, or they divulge personal information to your employer or to your family or friends. You are allowed to file a complaint against them. And you can do that directly with the collection agency in writing. And if that doesn't work, then you can go to the Consumer Protection Board of Canada and file a formal complaint. There, you can go on their website and there's the steps of how to file the formal complaint. You can file an investigation with the credit bureau, and I'll get into that when we talk a bit more about the fraud of how to fix things on your credit report if lenders are reporting inaccurate information. And you can also file a complaint with the Better Business Bureau. So there is avenues that you can take if you feel that you are being harassed or threatened or your personal information has been compromised. That would be the route that you would take. So let's say you receive small claims court papers in the mail, which can be really intimidating. And if that happens, I have some websites you can go to and some other resources, and you can also reach out to us. But small claims court is where you can be sued for up to $35,000 owing. And so that would be where if you owe debt other than, a large purchase like a house or a really expensive car, if it's under 35,000, it would go through small claims court. Anything above would go to the superior court. So when you get served those documents, you have 20 days to fill out your defense. And what you would do is, it's going to be on the forms, is you would fill out your defense, which would be either you disputing the claim. So I'm a victim of fraud. I never took out this debt. Or you would admit to the claim. Yes, I owe this money, but then you would request a payment plan that fits within your budget. So, yes, I took out this debt. This is my current income. These are my expenses. I can only afford $50 a month. And then you would file that at the courthouse and send a document to um, the creditor who sent the small claims court documents to you. Most likely, what would happen at that point is the creditor would call you once you filed your defense and they would work out a payment arrangement with you, because they also don't want to waste the court's time if they look at your budget and see that's all you can afford. Most likely the court will side with you. So they don't want to waste the court's time. If they don't side with you or they don't accept that payment arrangement, then it could go to mediation or a meeting with the justice at the court, as well as the creditor and yourself. And, the idea would be that the justice would help you guys work out a payment arrangement so that, nobody has to be garnished. One thing you do not want to do is you do not want to ignore small claims court or superior court papers. Because if you do not file your defense, then the creditor is automatically granted judgment, which means that they can then at that point garnish up to 20% of your gross pay. And they would send a document to your employer where then the employer has no choice but to send them 20%, up to 20% of your gross pay. So it is really important that you do not ignore those papers, even if, like, I know that it's extremely intimidating and scary and all of those things, but it's really important that you don't ignore them. Um, there is a wonderful website called CLEO, so it stands for the Community Legal Information Ontario, and it has lots of information on there. It's a website created by lawyers to help people navigate through the court process. And it is wonderful for various types. You can find information on family law. You can find information on landlord-tenant disputes. But for this purpose, I'm just going to talk about small claims court. So you go on there and you find their Pathways to Justice site and you look up the small claims court information and they're going to tell you how to fill out those forms. They have videos that show you how to submit forms, how to fill them out. It is a wonderful website if ever you're looking to navigate through the court and various different courts. It's a great website for tools for that. You can speak with somebody like myself who can go through your options, or you at that point might decide to meet with a trustee to talk about something like a bankruptcy or a consumer proposal. Bankruptcy and consumer proposal would stop this in its tracks. So if you got small claims court papers and then you filed with a trustee, the trustee would send what's called a stay of proceedings, and they would stop all of this from ever happening. So you would never be garnished. Even if you were being garnished, the trustee can send some legal documents to get that garnishment stopped right away. So at that point, you might be looking at, filing bankruptcy or doing a consumer proposal if needed. One thing I want to note though is that if you bank where you owe money and you're struggling to make those payments, the number one advice I give to my clients in those situations is to switch banks. You don't want to bank where you owe money if you're not able to maintain your payments. And the reason is because when you sign up for a form of credit, you actually sign a document that states that if ever you miss a payment, your bank's allowed to go into your bank account and drain your bank account to put towards debt. They don't have to take you to court. They can just do that, and they will do that. So it's really important that you protect your income. So if you are struggling and you're missing payments, then really I encourage you to go open up a bank where you don't owe money and start getting your pay going into there. Because it's really important that, your basic needs are being able to be met. You need to be able to, pay for your living expenses, pay for your food. It's very important. You need to be able to pay to get to work. So the last thing you're going to want is to have all of your money taken from the bank. Now, they're not allowed to take things such as ODSP or Ontario Works, but I have seen it happen. And they do need to give it back, but that can take some time. So it is really important, and you don't want to just assume if you're on ODSP or Ontario Works that it can never happen to you, because I've seen it happen. But like I said, they do have to give it back. Um, they are allowed, when it comes to garnishments and the bank seizing money, they're allowed to take any money that is derived from employment. So Ontario Works and ODSP are not, but things like CPP, um, WSIB, long-term disability, those are derived from employment. So those are garnishable. Old age security is not garnishable because that's not derived from employment. So that's kind of where the line is, if you're ever wondering if your wages are garnishable or not. Okay, so how to become debt free. There's a few different methods, and this is something that we can help with as well if ever you wanted to set up an appointment. But if, let's say, you have multiple forms of credit and you're making minimum payments to all of them, or in some cases, I'll have clients where they're making more than the minimum payment to every creditor. And their intentions are great. Their intentions are to pay down their debt, but they feel like they're getting nowhere paying it down. And usually that's because they're making more than the minimum payment to every creditor. So I usually will have them focus on one creditor at a time. Maintain your minimum payments to everybody and focus all your extra money onto one creditor at a time. That is going to be the fastest way to get out of debt. So there's a couple ways that you can do that. The first one's the snowball method. And the snowball method is where you tackle your lowest debt first, regardless of interest rate. I find this one is the one that's most successful for my clients because they see the progress quicker, which then motivates them to um, continue on the journey. So whatever that lowest debt is, that's the one that you would put all your extra money on and then maintain the minimum payments for all the rest of the creditors. Then when that one's paid, you then work on the next lowest debt and then the next lowest debt. So that's the snowball method. The next one is called the avalanche method. Same idea, but you're instead of focusing on the smallest balance, you're focusing on the highest interest rate first. So that one's great because you might be paying less interest, but it could take you a lot longer to pay off your debt. And so when I'm working with clients, sometimes we'll calculate what both of these look like. And at the end of the day, the amount of interest they're paying with the snowball method isn't that much more, but the progress they see is so much quicker. So I find people find more success with the snowball method, but some people much prefer to pay the highest interest first, and that's okay. The biggest takeaway is focus all your energy on one debt, maintain your minimum payments to the other. That's going to help you get out of debt the fastest way. Automate your payments. If you're able to automate it, that means you're not going to miss any payments. You can also negotiate. If you have high interest, do not hesitate to contact your creditor and see if they're willing to lower your interest rates. Some creditors will stop interest rates for a period of time to allow you to get your debt down. Some will, lower the payment. So work with them because if there's an option to lower that interest rate, which is then going to hopefully help you pay off some of the principal faster, that's a great thing to do. And that's not going to negatively impact your credit report. So I know they can be intimidating to contact, but if you're still up to date with payments, you have kind of a good leg to stand on. So give them a call and see if maybe they'd be willing to reduce your interest or lower your minimum payment requirement, whatever it is, so that extra money is going onto the principal. Let's say you have something in collections and you want to pay it off. You can offer them a settlement. If you have debt in collections, there's a good chance that your creditor is going to accept a settlement from you. So most times they will not accept a settlement through payments, but I have seen it happen. But usually they're going to give you in a period of time and say, if you can pay 30% of your debt, 20% of your debt, something like that, they're going to want it in one lump sum. But if you have the money to do that, call them and ask if they will take a settlement. Now, biggest takeaway from that, if they say yes, you need to get it in writing. Make sure, get their email address, send them an email, have them respond back that they're going to, accept the settlement and write out what that settlement is. Once that settlement has been paid, you need to get what's called a letter of release. That is a very important document. I have seen it too many times where a client comes in and says, this creditor agreed to settle at 30 cents on the dollar. I paid the payment. And now 2 years later, I'm getting a collection call from this collection agency saying that I owe the other 70%. And I don't know why that happened. Error on the collection agency's part, I would imagine. But now it's a he said, she said thing. So it's really important to get it in writing and very important to get that letter of release afterwards so that if ever that remaining portion does get sold off and somebody is trying to collect it, you now have proof that you are no longer responsible for that remaining portion. So really, really important. There's not-for-profit credit counseling agencies that can help. They offer what's called debt management programs. We used to offer debt management programs. We don't anymore. Now we offer education and advice um, through situations like this and meeting with clients and looking at their financial situation. And we'll go over all the options that are available to you, the pros and cons of each one, how that's going to impact your credit report so that you can make an informed decision. And then we can help you find a reputable company depending on which route that you decide to go. But there's some credit counseling agencies that offer what's called a debt management program. And what that is it's where you would make one monthly payment over a period of no longer than 5 years, and your creditors will either stop interest or they'll reduce interest. And so basically, you're then paying whatever that balance is at the time, you're paying that off over 5 years. It is a great option for people who might have things already in collections because it will actually increase your rating from an R9 to an R7. So your rating will actually go up through a debt management program if you have things in collections. It also allows for one monthly payment. It allows for stop to reduced interest. Um, and then it is open-ended, meaning that if ever you come into money, you can pay off the debt management program faster and become debt-free faster. You don't have to pay any extra fees or anything like that. A debt management program will stay on your credit for 2 years after the date of the last activity, or no, sorry, 2 years after the date it's paid off. So if you're in it for 5 years, it'll stay on your credit for 2 years after. But usually they have ways to help you build your credit once it's finished, once that 5 year mark is finished. So it is a really great option, but it's really important that if you go through that route, you do want to look for one that is not for profit, that is part of, the Canadian Association of Credit Counseling Services, because there are some for-profit credit counseling agencies um, that don't have the best practices. So it is really important that you're looking for the nonprofits and that they're regulated under the Canadian Association of Credit Counseling Services. So you just want to find the right one. And if you're confused of where that is, just give us a call and we can provide you with some information on that. An insolvency trustee, so that is a bankruptcy trustee. It's another word for that. And they are great for doing things like consumer proposals and bankruptcies. So, a consumer proposal is very similar to a debt management program in the respect that you make one monthly payment over a period of no longer than 5 years. The difference is that in a debt management program, you pay back 100% of your debt. And in a consumer proposal, typically you pay back a portion of your debt. So there's different ways that they're going to calculate that. I can't get into it right now because it's kind of long and a bit complicated. I can in a one-on-one appointment. But basically what happens is that most of the time you'll see that credit clients can pay back, 20 cents on the dollar, 30 cents on the dollar, 50 cents on the dollar. The idea is that you pay back a portion of your debt over a period of no more than 5 years. It is also open-ended so that if you come into money, you can pay the debt off faster. A consumer proposal will stay on your credit for 1 year after completion if you take the full 5 years to pay it off. So it's very confusing kind of how it's written. So I'm going to try and explain it. So it'll stay on either for 2 years after completion or 6 years from the date of filing. Oh, sorry, 3 years from completion or 6 years from the date of filing, whichever comes faster. So if you're in it for 5 years, it'll stay on 1 year. If you're in it for 4 years, it'll stay on for 2 years. If you're in it for 3 years, it'll stay on for 3 years, is kind of how it works. If you're in it for 2 years, it stays on for 3 years. So basically, it's going to be on your credit for 6 years, maybe from the date of filing, most likely. And then a bankruptcy. So bankruptcies are pretty straightforward. There is a standard that's set out from the government on what that payment would look like. So if you're somebody who's struggling with debt, uh, basically what would happen is that they would look at your household income and where that falls on the standard. So I don't have the standard in front of me, but I think a family of one can make around $2,200 a month take home. And if you make less than that, then you can go bankrupt and pay about 195 a month for 9 months to go bankrupt. After the 9 months, you're no longer bankrupt and you no longer owe any money. There are some duties you have to do. Like you have to attend 2 counseling sessions, you have to report your income for monthly, you have to let them do your taxes. But basically, that's kind of how that would go. And then after the 9 months, you don't owe any money and you're no longer bankrupt. And that stays on your credit for up to 6 years. Um, if, however, you make more than what the standard says that you can make as your family size, then you could pay more money to go bankrupt. So it could cost you more than 195 a month, and it will you'll be in bankruptcy for 21 months instead of 9 months, and that's kind of how that would go. If it's your second time filing bankruptcy, then you're bankrupt for either 24 months or 36 months, depending on your income, and it stays on your credit for 14 years. So it is a little bit more serious the second time you file, but it can be a really good option for people who are struggling to get back on their feet. It provides the relief for somebody to be able to breathe again, to be able to start saving for things, to pay for their basic needs. And I can tell you that it is very easy to get credit again after doing something like a bankruptcy, a proposal, a debt management program. It is very, very easy to get credit, and you would learn how to do that. So these options, I know they can sound scary, but they can really provide people with a lot of relief if they've tried all the other ways of handling on their own and they're just not able to get ahead. Um, so joint debt, when you have joint debt, it is you're both fully responsible for the debt. So I just want to, make sure that people are aware of that. Joint debt can be a little harder to do things like a debt management program or a consumer proposal because the person who you're joint with does need to agree to it. They need to know that you're in it. I don't think they need to agree for a consumer proposal, but at the end of the day, they are then going to become responsible for the debt. If you file bankruptcy on a joint debt, the other joint debt holder is now 100% responsible for the debt. So in those situations, sometimes both people end up doing one of these options. And it's also something to remember before you co-sign for somebody, is that it's really important that if they can't manage it, that you're going to be able to manage it. Government debts can't go in debt management programs, but they can go in consumer proposals and they can go in bankruptcies. You can't file bankruptcy on a student loan unless you've been out of school for 7 years. And a consumer proposal the debt will not be forgiven after if you have not been out of school for 7 years. But government debts such as CERB like CERB, people are needing to pay back CERB now. That can be included in bankruptcies or consumer proposals. Overpayments are a little bit more tricky, and you'd want to speak to the trustee about that one. Okay. And also, I just want to go back to student loans for a second, just because I've had a few people recently, probably throughout my career of this, having struggles with their student loans. If ever you're struggling when it comes to a student loan, or you have a child tax payment that all of a sudden stopped for whatever reason, or there's some sort of issue that you're having with receiving money from the government, or issue you're having with paying back the government and you're not able to get help with anybody, I really recommend that you reach out to your local MP. They are a really great resource for helping people navigate through student loans, navigating through child tax benefits, navigating through the disability tax credit. Anything that you are struggling with when it comes to specifically your federal part of of debt with government, please reach out to your local MP. That's what they're there for, and they are a really great resource. For the Ontario, be your local MPP. Okay, so let's say that you are a victim of fraud. For me, I know that when it happened to me, I found out because actually a creditor called me and said, I think somebody opened up credit in your name. And so I pulled my credit report and I found out that somebody changed my address to a BC address. They changed my phone number. They applied for multiple forms of credit, and they were successful at getting 2 forms of credit in my name. Uh, Thankfully, I was tipped off about it before any debt was actually incurred in my name. And so what I did is I contacted the creditors and, made sure that they were aware that those were open fraudulently. Sorry, the first thing I did actually was I called the police and I filed a police report because then when I contacted the creditors, I was able to give them my police report number, and you're going to want to hold on to that. So I contacted the creditors, I gave them the police report number, I demanded that they close those files down, and then I uh, got a hold of Equifax and TransUnion, and I let them know that I am a victim of fraud. And they were able to open up an investigation on my behalf, contact the creditors also, to make sure that those credit lines had been um, sorry, but the credit had been closed. They were able to deal with all of that. Um, I pay for a credit alert now, which really kind of sucks because it's like $25 a month and I don't want to pay for it. But just right now, I'm only about a year out of the fraud, and I just feel like it's important at the moment that I do pay for that. And so that credit alert basically says that nobody is allowed to open up credit in my name unless they can contact me at a certain phone number. I provided the phone number because I don't want them to use a phone number on my file since somebody changed it. So now if a lender does open up credit in my name without contacting me, that is 100% their issue because I have it on there that they're not allowed to do that without calling me at my phone number first. And then that also allows me to access my credit report as many times as I want. Because as I mentioned before, you can only get a free credit report once a year from them. So now I can get it often. Um, in my case, the fraud was dealt with. Everything was closed. I paid for that credit alert. I have the notes on my credit report. So for me, it was good. For other people, it's a little harder. So for other people, they don't find out that they have fraud until all of a sudden they get a collection letter that says that they owe, $20,000, or they get small claims court papers of a creditor trying to sue them. Some people have found out, that vehicles have been taken out in their name. There is a lot of fraud right now, a lot. And all of it is fixable by kind of doing those steps, filing that police report, contacting the creditor, opening up an investigation with Equifax and TransUnion. Uh, all of that's fixable, even if you're about to get small claims court papers. If you have all the documents that show, that you're a victim of fraud, you're not going to be responsible to pay this money. You don't have to pay it. But all of this stuff takes time. And so it's really important. So please, if you've gotten anything from this, pull your credit report once a year. Make sure everything is good on there because you don't want to be, about to go for a mortgage renewal or finance your vehicle or get your first house, and that is when you find out. But everything is fixable. That I can assure you. Okay, so how can we help? So we offer free assessments, and our contact information's on the other slide, on the next slide. And so basically, anybody can come for a 30-minute free appointment. Typically, in those appointments, clients are calling in because they have debt questions. Maybe they have things in collections, or getting collection calls. They want to know, what it would look like for them if they filed a bankruptcy or a consumer proposal, and maybe they're a bit nervous to go ahead and meet with the trustees. So they just want to have somebody to bounce ideas off of before they feel like they're needing to commit to something. So the fact that I don't do any of these programs, I just provide the education, offers them just kind of a safe space to learn about their options. So anybody can access that no matter where you are. We do also offer coaching programs, which do have a fee. And so the coaching programs, one is around budget coaching. So that's for people who, might be struggling to follow a budget. And, I do offer free budgeting advice, but for the coaching program, it's up to 3 sessions. We would meet, fill out a financial assessment, find out where you are, what you want, where you want to be. I then create a 6-month budget plan that has all of your goals in there. Basically, you open that up and it's a step by step, like every week you follow it step by step to help you keep up to date with your payments, pay off your debt, reach other financial goals. And that coaching program is on a sliding scale because we have been fortunate enough to receive funding from TD Bank. So For full fee, if you make over, I think it's $4,500 a month take home, the fee for coaching, for budget coaching is $200, and that includes all 3 sessions. So it's 200 total, plus all the tools, but it can be as low as $30 depending on your income. Another coaching program that we offer is called money coaching. And that is for people who aren't really concerned about the numbers yet, but they're more looking at their behaviors and patterns when it comes to money. So, maybe they are somebody who is, even with a great budget in place, they're overspending. Maybe they're having a hard time being open and honest with their partner about their finances. There could be, some trauma around spending, various different spending patterns, maybe gambling, different things like that, where we're going to go through kind of a really in-depth coaching program with them. It's up to 4 sessions. And, we're going to look at what was it like growing up with money, what was your caregivers like with money? Do you share any of those attributes with them? And then we put together really great tools for you to help you overcome whatever it is that might be blocking you from financial success. And that one also is on a sliding scale. So that one, because it's really, really in depth, is 175 per session for full fee clients, as low as $30 a session for lower income clients. And then we have the Women's Financial Empowerment Program, which is funding from the Ontario government for the Investing in Women's Futures grant. And that's for anybody who identifies as female who's ever at any time experienced intimate partner violence. And they can get, up to 3 sessions for free, and as well as access some of these coaching programs for free through that Women's Financial Empowerment. Now, for that program, you do have to be in the Kingston area just because it is specific to that area. But I encourage you, if you feel you qualify for that, like I said, you can access all of these great programs for free through that funding. So if you have any questions or comments or anything at all, you can always send us an email at info@resolvecounseling.org. You can contact us at those phone numbers, or if you're looking just for more information, you can always just check out our website as well. And so, yeah, I hope that was informative for everybody. And I'm just going to stop recording now, just in case anybody does have some questions. So let me figure out how to stop recording. Don't know how to do that. 1 second. I'm going to do here.